Welcome to the Economic Countdown. Please remember to share, comment, like, subscribe. The pandemic has sent the world into one of its worst recessions ever. Most countries have gone into some form of lockdown on and off throughout the year. This has reduced cross-border travel and accelerated job losses. Governments have increased spending to help lessen the economic carnage, but the debt created by the spending will haunt them for years to come. Central banks worldwide have cut interest rates and purchased more assets to inject capital into the financial system. The pandemic has created a huge global economic slump, and it's not clear when a recovery will take place. Progress on the vaccines has helped the economic outlook, but a potentially slow rollout of the vaccines across developing countries could slow the comeback to pre-pandemic levels. The vaccine discovery is a shot in the arm, but not until 2022. City economists said in December. Still, though, there will be clear improvement in the global economy in 2021, and partly because it's not hard to be better than 2020. Now, virus mutations threaten to stop the progress that's been made. It's unknown whether the new vaccines will work for the mutated virus now being found in a number of countries. And this could push back economic recovery. The rapid spread of the virus, which was first detected in China, has greatly reduced economic activity. As a result, GDP, the most encompassing measure of activity, plunged to record lows. The International Monetary Fund forecasts the global economy could shrink 4.4% this year before bouncing back to 5.2% growth in 2021. The IMF has warned that the economic recovery will be long, uneven, and uncertain. Travel restrictions remain in place or have been reinstated by countries trying to stop the early winter rampage the virus has been on. Many countries are only opening borders to visitors with specific nationalities or from certain destinations. Some are requiring visitors to provide a negative virus test before letting them in the country. Some are requiring long periods of quarantine or self-isolation on arrival. This has brought international travel almost to a halt. Major airports that usually serve millions per year are near vacant and have been forced to lay off thousands of service workers. All of the businesses that support those visitors, from taxi cabs to hotels and food service, have suffered deeply. Job losses continue to accelerate. A major problem associated with the pandemic is the continued advance in job losses globally. The Organization for Economic Cooperation and Development, an intergovernmental agency, said that some countries, the early effects of the pandemic on labor markets were 10 times larger than that observed in the first months of the 2008 global financial crisis. The vulnerable lower-paid workers are bearing the brunt of the crisis. Low-paid workers are key to ensure the continuation of essential services during the lockdowns. These lower-paid workers are a lot of the time at substantial risk of exposure while working. The OECD said in a report that the low-paid have suffered greater job and income losses. Government debt levels are soaring. Worldwide, governments have increased spending in an attempt to soften the economic blow of the pandemic and protect workers and jobs. As of October, this spending was $12 trillion, according to the IMF. The staggering levels of this spending continue to push global public debt to an all-time high. The IMF has said governments should not stop this fiscal spending too soon. With many workers still unemployed, small businesses struggling, and 80 to 90 million people likely to fall into extreme poverty in 2020 as a result of the pandemic, even after additional social assistance, it's too early for governments to remove the exceptional support, said the IMF. Central banks have stepped in as well by cutting interest rates, many to record low levels, and this should help governments manage their debt. The U.S. Federal Reserve, whose policy affects economies worldwide, slashed interest rates to near zero and committed to not raising them until inflation exceeds its 2% target. Central banks in advanced economies, including the Fed and the European Central Bank, have also increased their asset purchases to inject more money into the financial system. That's a move also adopted by an increasing number of central banks in emerging markets as they explore ways to support their respective economies hit hard by the pandemic. Thanks for watching. Please remember to like, share, subscribe, and comment. God bless America.